Breakingviews, Corona Capital, Dining Bonds Milan, Hong Kong, London, New York. Reuters Breakingviews. Breakingviews has launched a daily column covering pandemic-related insights that you might have missed. Throughout the day, we'll bring you shorter than usual views from columnists around the world with the same financial savvy on companies, economies and capital markets during this important unfolding story. Tips are seen on the bar at McSorley's Old Ale House, which, established in 1854, is referred to as New York City's oldest Irish saloon and was ordered to close at 8 p.m. as part of a city-wide order to close bars and restaurants in an effort to slow the spread of coronavirus the day before St. Patrick's Day in Manhattan, New York City, New York, U.S., March 16, 2020. Reuters, Andrew Kelly. Latest Dining bonds likely to be undersubscribed. The virus-hobbled restaurant trade has cooked up a financial innovation, dining bonds, to help make up for lost revenue. Almost 200 mostly American restaurants as of Friday are selling what is effectively a discounted gift certificate to be redeemed normally after 30 to 60 days. In the case of executive chef Suzanne Cups's recently opened 232 Bleecker in New York, future patrons pay $75 now, and get $100 off their bill when the restaurant reopens. On its face, a 33% unannualized return for a short-term investment might not seem too shabby, but the terms aren't exactly creditor-friendly. It's unsecured and in the event of default, the recovery value would be zero. It's a nice gimmick, but restaurants need quick and generous federal aid, not a GoFundMe campaign. By Anna Ziemansky. Campari changes its mind. Italy's apparel maker is shaking and stirring a planned power grab. Just a month ago, the Italian cocktails group proposed to move its registered office to the Netherlands, chiefly to allow the controlling Garavoglia family to enjoy super voting rights amid a shopping spree. With shares trading near €9 at the time, above withdrawal rights offered to potentially disgruntled shareholders, the governance change was supposed to be painless and come at little cost. With David Campari Milano shares now trading some 20% below an exit right set at €8.376 a share, the risk of investors rushing to grab the cash is real. No wonder its board amended the deal, saying it will cancel the offer if it must buy out more than 3 million shares, a bill of some €25 million in total. What looked like a clever move by the Garavoglias is beginning to look more like a Negroni-induced hangover. By Lisa Jucker. Yuan Fudeo's great timing. At a time when deals are drying up and investors are jettisoning money-losing startups, a Tencent-backed Chinese online education platform is close to completing a financing round that would value it at around $7.5 billion, Reuters reports. A company spokesperson has disputed the Yuan Fudao valuation and deal timing is not accurate, but would not elaborate. It makes sense though, as online learning is front and center amid school closures forcing students to work from home. Downloads of online education apps have surged since coronavirus hit. But it's not necessarily an easy ride. Alibaba's Ding Talk, a communication app which offers live stream and homework grading features, has faced sharp criticism from students who have flunked it, leaving subpar reviews. It may be easier to get investors to hit the books than students. By Sharon Lamb. Casino bolsters post-virus defenses. Long queues of shoppers outside grocery stores show the sector is one of the few winners of the pandemic. Casino Guichard Perrichon, the €4 billion retailer, is in the enviable position of outperforming France's CAC 40 index. So, it may seem like a strange time to flog 3 warehouses and 567 discount stores to its rapidly expanding rival Aldi France. However, boss Jean-Charles Nouri was in a tricky spot already. Before shoppers began filling trolleys of toilet paper and pasta sauce, investors, including bankrupt parent Raleigh, were no longer receiving dividends. Its debt pile was also nearing €5 billion. Analysts at JP Morgan reckon Friday's sale will produce €650 million of net cash, cleaning up its balance sheet while panic-driven sales boost profitability seems like a safe gamble. By Amy Donnellan, Tiffany on the cheap. French luxury goods giant LVMH might seek to buy shares in its Hollywood fame takeover target, Tiffany & Co., when the open market, Bloomberg reported on Thursday. A coronavirus global health emergency has forced the U.S. jeweler to temporarily close its flagship Fifth Avenue store, celebrated in Breakfast at Tiffany's, and several others, dragging its shares as low as $111 on Wednesday. Such a chunky discount on LVMH's $135 a share cash offer may tempt French tycoon Bernard Arnault to try and save on its planned $16.2 billion bid, which Tiffany shareholders blessed last month. Yet with shares rising on reports of LVMH's potential move, that window of opportunity is narrowing. Tiffany's virus discount is proving as fleeting as fashion. By Lisa Jucker, Breakingviews. Reuters Breakingviews is the world's leading source of agenda-setting financial insight. As the Reuters brand for financial commentary, we dissect the big business and economic stories as they break around the world every day. A global team of about 30 correspondents in New York, London, Hong Kong and other major cities provides expert analysis in real time.